Our next presenter is Will Bischoff. He is the Senior VP Strategic Markets. Okay, thank you. For Homesteaders Life Company, he's responsible for working with distribution partners, funeral home owners to implement pre-need strategies for long-term success. Prior to joining Homesteaders in 2015, Will served as the Vice President of Sales and Business Development for Forethought Financial Group and Operations Control, and Vice President of the Corporate Development for Keystone Group Holdings. He earned his bachelor's degree in accounting from Spring Hill College, his MBA in corporate finances from the University of Tampa, John H. Skies College of Business. In 2022, Will was appointed as a trustee for the Funeral Service Foundation. Thank you for being here, Will.
Thank you. Thank you guys for sticking around this afternoon. I appreciate you guys being here. Again, I'm Will Bischoff. As she mentioned, I'm currently the Senior Vice President at Homesteaders Life, working in our sales area. But a few years ago, we recently launched a funeral home lending program. So in my past life, I have more of accounting and finance background. So worked with a number of funeral homes with the consolidator back in the late 90s and early 2000s, the Keystone Group. And so at Keystone, I worked with hundreds of funeral homes, eventually working my way up to the corporate development role. So spoke to many owners that were looking to buy or sell funeral homes. So it's really a passion on it. So again, appreciate the opportunity to visit with you guys. I think we have an hour scheduled. We should have plenty of time to go through the material. So if you guys have questions at any times, please raise your hand. Happy to go down any questions that you guys might have. But with that, we'll jump right in. Figure out how to get that slide. So today we'll talk a little bit about the current landscape in the funeral profession as it relates to buyers and sellers, independent ownership. We'll talk a little bit about some of the consolidators that are out there and what we're seeing in homesteaders as far as funeral home owners and evaluating their succession plans. We'll talk about the different financing options if you are looking to potentially acquire a funeral home, pass it on to the next generation, or even on the other side, looking to sell your business. What are the different financing options that are out there that could help you with that succession? We'll also go through a high-level valuation exercise. So when buyers are looking at businesses today, how do they value it? Many times you'll hear about cash flow lending or multiples of EBITDA. So we'll cover that, again, go through an example. And then finally, what does it take to be prepared? So first, I want to talk a little bit about the trends in funeral home ownership today. So these statistics are from a 2023 NFDA survey. And as you can see, the top bar, the grayish black bar, that represents independent funeral home owners that are at the age 60 and above. So what you can see here is you look at the trend from really 2014 at 29%, 2016 36%, in 2022, which now this is 4 years old, 40%, 47% of the owners that answered the survey are over 60 years old. So what does that tell you? That tells you that there's a lot of owners out there that are going to need to be determining how they either plan their exit or what to do with their business in the coming years. So if you are a buyer, it creates a lot of opportunity because there should be a lot of potential sellers out there. As far as transition plans, again, from the same survey, 46% of owners plan to sell or transition their business within the next 5 years. So again, you can see 12% in the next year, 20% in the next 2 to 3, 14% in the next 4 to 5. Again, this is a few years old, so it's almost close to 50% of owners are going to be looking to transition their business. Again, that signals a lot of opportunity. So as we look at the potential financing options that exist out there today, there's a number of them. First, there's SBA loans. So many of you may be familiar with the SBA, the Small Business Administration. So the benefits of working with SBA is there are favorable rates and repayment terms. There's also flexible use of funds. You can sometimes get working capital included as part of the SBA loan. The challenge with SBA is it's a very lengthy application process, and it is capped at $5 million. Another is traditional banks. So again, many of you, if you're a funeral homeowner today, you have banking relationships established for your local deposits in your community. Banking is a very important part of your relationship. So as a credible business owner, you already have an established relationship with the bank. They know the ins and outs of your account. So there's some relationship and some trust built there. So again, because of that relationship and the knowledge of knowing each other, there's the potential that you can get some favorable rates and repayment terms. The challenge, again, with banking, traditional banking today, most of the loans they could do are only on the tangible assets. So, how much is your building worth? And then even depending upon that, they may only be willing to lend up to 80% of that. So as we go through the exercise a little bit later, your funeral home business, based on the cash flows that are being generated out of the business, could be worth potentially much more money than just the real estate. So when you're looking to buy a business, you may need more dollars from a lending perspective than what the real estate's worth. Any questions on those two particular financing options? Okay. Another one is seller carry. What that means is that the individual selling the funeral home is maybe willing to hold the note personally for the buyer. That doesn't always mean the entire note, but potentially if, again, using the traditional banking example, if the bank's only willing to lend 80% of the real estate value, then maybe the owner has to carry back the additional value, being the goodwill portion for the potential buyer. Again, the drawbacks on that from a buyer perspective is sometimes because it's a personal relationship, they can charge a higher interest rate, and you never know what the future holds. Again, it could strain the relationship between the former owner and the new owner if, for whatever reason, business gets a little tight, the ability to make payments gets a little tight. So again, that's a drawback. And then finally, cash flow lending. So again, the benefits, it's a flexible loan structure. Usually it's broken into two components. There's the real estate portion and the goodwill portion. The real estate would be the first loan, and again would have certain amortization rates and financing rate. The goodwill loan, because it is based on goodwill and not a tangible asset, it could be a little bit higher interest rate and different amortization rates. But again, you're able to get the entire loan done based on the value of the business. The lender that does this, such as homesteaders, there's some other carriers doing it today, they understand EBITDA lending, meaning they understand funeral home valuation. Funeral homes are one of the most steady businesses from a cash flow perspective. So looking at historical financials, which we'll talk about, again, that really paints a great picture for the lender, knowing that there's good cash flows that can support the loan payments. And then finally, another benefit is there's no dilution of ownership. So what that means, again, in the example before, if you're only able to borrow from the bank the real estate value, maybe in order to get the deal accomplished, you have to bring in a silent partner that has those additional funds. By going through cash flow lending, it eliminates the need to maybe bring in additional partners and additional equity owners. The drawback, there are loan covenant requirements with cash flow lending. So in the loan documents, there'll be some financial metrics such as debt coverage ratios, asset liability ratios that you'll need to meet on a quarterly basis in order to keep the loan in good standing. If any of those covenants are tripped, the lender could potentially call the loan or work with you to refinance the loan. Usually the cash flow lending also involves personal guarantees. So that would be putting your own personal assets at liability, again, if you were the buyer. And then again, unlike a traditional loan that's based on real estate, the amortization rates and payback terms could be shorter, again, depending upon the structure. questions on those? Yes?
How
So on the goodwill portion, I believe those are usually, that's a 10-year loan. The real estate is usually, it's a 10-year loan, but it's amortized over 25 years. So it'd be a balloon at the end of 10 years. That's just one example. Again, talking to the lender, they can present all the different payback options.
Which of the four do you see most people doing?
It depends on the size of the business. You know, SBA continues to be a very popular loan option. Traditional banks, they're still depending upon the assets that the buyer has already. Maybe they already have cash built up to bring to the table. So it's really a mix to say that here's the breakout of loans today. But again, all of those options, we're not seeing much seller carry today. I mean, there is some, particularly in family-owned situations where it's being sold from one generation to another. But otherwise, it's a good mix between all three. Any other questions about the financing options? Okay. So to talk a little bit about preparing yourself for either a sale or an acquisition, we'll talk a little bit about what that succession planning overview looks like, talk about the acquisition landscape, and then again, we'll go through a sample valuation. So again, how many of you today have a succession plan written down? Maybe you're not ready to sell, but you kind of have a formal plan written down on here's how I plan to succeed my business. Great. A couple. This is often overlooked in many business operations, and it's hard because it requires you to take time away from your business. There's a phrase that we often use, you need to take the time to work on your business rather than in your business. So taking the time to do that planning, working with, preparing for potential risks, preparing for potential health issues. So the benefits of having that plan in place today is it does provide continuity. Again, so if something happens, that succession planning can occur and the business can continue on as a going concern. It also offers protection and it enhances the value of the business. So when you know that you have good staff that can take over the business, that you can count on to run the business, that's very important as well. As I mentioned, the challenges is easily overlooked because you're in the day-to-day. It's hard to take that time away from your business to prepare. And it requires maintenance. So it becomes a living document that you have to update, almost on an annual basis. Here's how my year ended. Here's where I am personally. Here's where I am personally, financially. At what stage am I ready to transition my business? So here are some things to consider when you are completing a funeral home valuation. So first, there's the financial options. So again, what's the valuation and what's the structure? As I mentioned, is it real estate value? Is it cash flow value? Sometimes the multiple of revenue is sometimes used. But what's the structure? So again, is it a corporation? Are you buying the stock of that business, or are you buying the assets of that business? So in a purchase agreement, you typically buy either the assets or the stock. When you buy the stock of the business, you're accepting the risk of that business and any past business practices. You also may be giving up some amortized or depreciation value because when you buy assets, you get to record those assets at their current fair market value. So again, that creates some tax implications. How are you going to maximize or minimize the sale price? Again, are you buying or are you selling? From a legal perspective, there's always issues in planning. So again, what structure are you going to put in place? What covenants not to compete, or what employment agreements or consulting agreements are you going to put in place? From a liability standpoint, many times when a business is sold, they'll do an appraisal of the real estate, they'll do surveys, they'll do phase one environmentals. What potential risks exist there based on the property and assets that you own. Again, under legal, we highly recommend, both on the financial side and the legal side, that you consult with some folks that have experience in business transactions. If they have experience in funeral business transactions, even better. But to use your brother-in-law, who's maybe a family attorney or an attorney that handles medical malpractice, that has zero experience in business transactions, you're just setting yourself up for potential issues, and you certainly don't want to be taken advantage of. Same with the financial. There's many companies out there that can consult on again, positioning your business for sale or acquisition. And then finally, the psychological and social considerations, and this one's often overlooked as well. Particularly if you are a seller, are you prepared for retirement? Are you prepared for that next chapter in your life? And are you going to be willing to let go of your business to allow the new owner to take over and potentially make some changes with the business? In my experience in the Keystone days, a lot of the value we were buying was the name on the sign. So to come in and make sweeping changes or sweeping staff changes, that hardly ever occurred, because what you're buying is how they run their business, what they're thought of in their community. But again, as the potential seller, we had many owners or former owners that just continue to come in, and it's important. Hey, I know how important families think of you and your community. They lean on you when they need you most. They've come to trust you and be friends for many, many years. So even once you've gone and sold the business, many families will still reach out and contact you. Can you be there for us? So it is a challenge, and so you really need to prepare yourself. What's life going to be like after the sale? So a lot of things to consider. A lot of times we'll talk about current market metrics. We'll talk about valuation multiples. So again, this is based on cash flow and EBITDA. But we're seeing deals 4.5 times to 8.5 times. The larger the firm, the higher the multiple commands. But the one thing you want to be sure is that your fundamentals are solid. What we mean by that is your financial statements, your accounts receivable, your pre-need backlog. All of those are a requirement, and during a due diligence process, people will look into. We'll talk a little bit about that diligence process. But what I would always say about your business when someone says, what do you think my business is worth? One response I say is, whatever the highest bidder is willing to pay for. So the more interest you can have in your firm, the potential larger purchase price you can command. So again, it's all about making sure, again, working with folks to know that if you are in a position to sell, knowing that you can have as many potential buyers as possible. So we talked about solid fundamentals. So as a buyer, what you want to potentially be looking at is, what's the market look like? Is it stable? Knowing the competition in town. Is someone opening up a new funeral home? You certainly don't want to buy a funeral home, know the market share, and then come to find out, well, hey, someone's opening a new funeral home in the community to start splitting the market share. Is the case volume stable? So we'll talk a little bit about case volume, but again, when you're buying, you want to look at historical case count and maybe even historical mix of business between burial and cremation. What are the trends there? Is it growing? Is it shrinking? What's the cremation trend? And again, looking at the pre-need backlog. So a lot of times owners will ask, well, what's my pre-need worth? Well, from a pre-need standpoint, I don't know that there's a specific metric or factor that says I have 10 million in pre-need, so that's going to increase my purchase price by X. But what a buyer's going to look at is say, well, there is a difference between having only $1 million in pre-need versus having 10 million in pre-need. Having 10 million in pre-need just increases the confidence of that potential buyer that, hey, I know that there's going to be continued stable revenues for many years to come because of this pre-need backlog. So that's where they would look at the multiple, and again, based on demand, be able to increase the multiple for your business by having a good solid pre-need background. Staffing is important as well. Again, if you plan to sell your business, maybe you don't plan to step away fully, but again, you've earned that right to retirement and to spend some time for yourself. But what's the staffing like that's going to be there on the day-to-day basis? Particularly if it's going to be an absentee owner like a consolidator or regional consolidator, they're going to want to be sure that there's good staff in place to continue the business. And then again, the facilities as well. If you're a buyer, you're looking at the building. What's the carpet like? When was the roof last replaced? What's the water heater and HVAC and age of those things? So having your facilities in good condition, that's not to say you need to do a total makeover or put all new carpet and paint in before you sell, but so long as it's in good condition, you know, if you still have the shag carpet and it's 30 years old, that's going to impact the purchase price because the new owner is going to want to come in and make those changes and updates. Any questions? So this is kind of a timeline if you think the succession planning overview. So first there's the courting process. Again, we talked about it. If you're interested in selling, making sure you have as many potential buyers. But if you're looking to grow through acquisition, the most important thing you can do is let that person know you'd be interested in their business. And many times, you know, if you're worried about that owner being offended, you shouldn't be. Hopefully the owner takes it as a compliment. And maybe they're just not ready to sell. But you've planted that seed, and when they do get to that point, they'll say, oh, I remember, you know, this gentleman asked, or this person asked that they'd be interested in buying a funeral home if it ever came for sale. So you always want to make it known that you're interested. I've seen so many examples where, you know, a potential buyer said, I didn't even know they were for sale. Well, because you never told them. So you have to take that opportunity to sell them. The other thing that is a great thing to do is there's a number of funeral home brokers, consultants out there. There's Johnson Consulting, there's Foresight. Those are kind of the two big ones that most of you may know through the trades. Making sure that you are on their list as a potential buyer. You know, letting them know, like, this is the type of firm I'm interested in. This is the geographical area I'm interested in. So if something does come through the brokers, that you are on a kind of pre-approved potential buyer list. So you do get invited to the party, if you will. So that's the courting process. Second, then obviously there has to be mutual interest between the buyer and seller. Then it comes to the negotiating stage. So this is where, again, based on some preliminary information, such as historical financials, maybe a visit to the funeral home, this is where you would then get to the letter of intent. And the letter of intent, it's usually a non-binding letter of understanding that as a potential buyer, based on what I know about your business today, I'm willing to offer this purchase price. And this is how I would break it down. I would pay this much in cash. I'm going to buy your assets of the business, not the stock. I would like for you as the owner to enter into a consulting agreement for 3 years. I would also like a non-compete where I'll pay out dollars over the next 10 years for a non-compete. Just laying out, again, all of those things that at a high level you would like to make the offer to buy their business. Then, based on some back and forth, if there's agreement between the buyer and seller, the letter of intent is usually signed, and then it gets into the diligence process. So this is where we'll talk a little bit more later, but this is where you do a deeper dive on the historical financials. You look at their historical case count. You do get a tour of the facilities. You get the survey, the inspection, the appraisal, the phase 1 environmentals, and then you're also working with an attorney to draft those legal purchase agreements, employment agreements, consulting agreements, non-compete agreements, all of the above. You're looking at the cars and the mileage and all those things that really qualify that, yes, based on the letter of intent, I'm still willing to move forward. If you do find things during that diligence process, for example, hey, the roof's 30 years old, it's gonna need to be replaced, you know, based on my original letter of intent, I'm gonna need to adjust it for the cost of replacing the roof, or maybe you split the cost of replacing the roof. But usually during that diligence period, again, if there's anything found that could adjust the purchase price, that's where it's discussed as well. So once all that occurs, everyone's come to an agreement on final price and final terms, then you have the closing. So then after the closing, there's the onboarding process. So again, depending upon who you're selling to and who the buyer is, if it's a corporation, maybe they have some HR and benefits programs that they have to do onboarding for the employees. Maybe they use a different case management system that you were using in the funeral home. But usually you want to take your time with those things. Again, change is hard for a lot of people, so particularly your staff. You want to be sure that there's a lot of good communication, open communication, transparency about what's going to happen in the future, and that as an employee, they feel confident that they're still in good standing at the funeral home and have a job going forward. We talk about the honeymoon period. Again, that's where just a lot of good open communication needs to occur between the staff and the new owners. Also, the former owner. Again, the former owner is going to continue to hear from the community, hear from their former staff. So making sure that good, transparent communication exists is critically important. From an operating standpoint, again, we talked about potentially case management programs. Maybe there's a change in certain vendors, be it casket suppliers, the pre-need program. Usually there's not too many changes in the back room, but again, just insurance, all kinds of things related to operating the business. And then again, finally, reality sets in. So hopefully, again, in most cases, it becomes a great transition. Everybody's happy, and you've had a great succession of your business. The new owner's happy with the business and the staff and the facilities, and everybody's one big happy family. So it always happens like that, right? We wish. So, any questions on this? Yes.
It's just a comment. I've recently been through this process myself, and I think all of the funeral directors in the room, if not the majority of them, love their communities, love the business that they have nurtured,
Dedicated their life to, sure.
and rather than courting the number of different purchasers, I thought it was Bob yesterday who said, select the person, not hire them. And sometimes you have to take a little less to select the person that you want to be in charge of your business. The last thing I would say is, for those of you considering selling, be supportive of your new owner, even though he or she is not going to do things the way that you did. All of us have heard 1,500 stories of the former owner who didn't like that you put up new drapes and raised tax. Be supportive. You want him to succeed. You want him to build upon what you did.
Yes.
And that I should check now.
That's good.
Which is big pay.
That's great advice. Let's talk afterwards. But you're right. It's all communication and supporting one another, and like you said, selecting the person. And again, in many cases, the owner doesn't sell to the highest bidder. He sells to someone that's paying a fair price, but also just from the environment and the culture of the company buying it or the individual buying it, it's very important. So we don't always see funeral homes go to the highest bidder.
But it can't be supportive move.
Yeah. Yes.
Why sabotage what you do?
Well, true, and again, back in my Keystone days, it was critically important that we had the former owner's involvement, because again, that's the name on the sign is a lot of the value we were buying. So if someone said, "Well, I'm done, I'm throwing the keys on the table, I'm moving to Florida," those were deals, in my experience, we normally wouldn't do. So again, it depends on the community. If it's maybe in a metro area where there's a lot of competition, maybe that's different, but our footprint tended to be more suburban and smaller communities. So, again, thank you for your comment. So, doing a deeper dive on the due diligence piece, we talk about the revenue. So, what are your funeral homes revenues? And historically, we would again look at that historical case volume. We'd look at what the cremation mix was. We would even break down, but in your burials, well, here's what were true at-need burials, and here's what were maturing pre-need burials. Because many cases, if you're guaranteeing your pre-need or the funeral home is guaranteeing your pre-need, there may be some shortfalls there or discounts that need to be given. So breaking out the at-need burial revenue and the maturing pre-need burial revenue gave you a pretty good picture of what's going on. Again, we would do the same thing on cremation, at-need cremation, maturing pre-need cremation. And then we would have an other revenue section, such as ship-ins or ship-outs. You know, many times someone may be on vacation or they winter in Arizona or Florida, so they unfortunately pass away there, they need to come back. Maybe you're not getting all the full service or little fee. So again, kind of breaking those out, we would do that as well. Also, what are the averages? You know, what have the price increases been to the general price list over the last few years? How do you see that impact the averages on those cases? And again, looking at that pre-need backlog. From a competition standpoint, again, looking at the competition, maybe you want to collect their general price lists and see how the competition's pricing compares to the funeral home you're looking to buy. On the expense side, we would look at, and on the revenue section, we would break out cash advances. That's really an accommodation. So if you're not making money, we would certainly record the dollars in and dollars out, but we would break those out separate from the revenue section. On the expenses, you have your merchandise costs. Again, what does your current casket, vault, urn deal look like? What's your labor cost? So again, it's not just your full-time and part-time staff, but we know benefits continue to be very important, but very expensive. Again, what are the facilities expenses? What are the vehicle expenses? Are you leasing your vehicles? Are you leasing office equipment? Again, just going through a deep dive on all those different expenses. Again, we talked about non-competes. As a potential buyer, you want to be sure that the owner has a non-compete agreement so that they don't simply go down the street and open up a business and compete against you. Again, those usually are 10-year terms. There's financial compensation that's a part of those as well. But again, critically important based on how much you're paying for that business. But again, there's always other things you can continue to look into from a diligence standpoint. So today, this is just a snapshot. I'm sure there are companies on here that we're not thinking of or considering. But, who are the potential buyers? So there continues to be the large corporate and public companies. You know, SCI continues to be public. Carriage is public. Park Lawn, Foundation Partners, Heritage are big groups. They're not public, but private equity backed. You have your regional consolidators. Some of these you may have heard of. Altmeyer, Jimmy Altmeyer is kind of in the mid-Atlantic states. Burton, many of you know, they operate here in Iowa. Great company based out of Minnesota. Newcomer based out of Topeka, Kansas. But then you also see some new entrants like Impact, this Cambridge Avenue Partners, Landmark Funeral Group. So there continues to be a lot of new entrants into the funeral profession, and this, you know, there's a lot of private equity dollars out there, so they're looking at the demographics, they're looking at the makeup of the funeral profession continues to be largely independent funeral homes. You know, if there's 20,000 funeral homes in the U.S., it's still estimated that somewhere between 70 to 75% of those are still independently owned. So again, they're looking at that as an opportunity for continued consolidation. But it's important to know with those private equity firms, what's their long-term plan? Because private equity company usually comes in 3, 5, 7 years, they want to turn that money, sell it, take it public, take those dollars and go somewhere else. So it's important to know who the buyer is and what their long-term plans are. We continue to see some the adjoining competitors. So again, funeral homes in neighboring communities that are beginning to form consolidation through like a hub and spoke. So it could be 5 to 6 funeral homes. Obviously, there's the family transition that we still see in the profession. And then selling to key employees, that's always a great option. And again, I think the cash flow lending creates opportunities where a key person may think that they don't have the capability or the finances to make a transition or make a purchase, but it's always worth the conversation because the value is based on the cash flow. And so long as the cash flow can support the loan, we're seeing many key employee transactions in the last few years. Any questions on any of these companies or the landscape today? So now I'll take a few minutes to go through a high-level sample valuation exercise. So as many of you work with your financial statements, it's pretty easy. Revenues less your expenses equals profit. It's really important to, again, have your financial statements in good order, whether you're using a case management system to help with that, you're using a local accountant to help prepare those. Having good, timely financial statements is critically important to help you get a real line of sight of what's going on with your business. So again, we talked about on the revenue side, looking at averages by type, breaking down the service, product, and ancillary merchandise options. Again, we separate cash advances and other income and expenses. We always require at least looking at historical 3 years. If you can get 3 to 5 years, great. And again, sometimes the brokers will have done that type of analysis, but I'm not saying don't trust the brokers, but I would definitely do your own due diligence as well. So here's an example of an income statement. So at the top, you can see the number of cases, the average sale, and your total revenues. So in this example, we're looking at a current year where they did 207 cases. Total revenues were $1.168 million, and your cost of sales, which is typically your casket vault and urn merchandise, at $189,000 for a gross profit of $979,000. But when you compare it to the prior year, you can see that the cases were actually down over the prior year. So you want to inquire about that. Sometimes the market itself is down, so having good market share data to see where did the other funeral homes finish is important. But if you look at the average sale this year was almost $100 higher, $79 higher. So that's great. Maybe there's been a little pricing adjustments. Maybe the staff has been offering more memorialization products, any of the above. So getting a good understanding of what are driving those increases in average sales is important. From your selling, general, and administrative expenses, these are the categories we would, again, typically break them down. You have your labor expenses, your facility expenses, vehicle expenses, advertising and promotion expenses, your other funeral costs. This is where sometimes we would place those cash advance, income, and expense items. And then, again, your other operating expenses. Subtracting all of those becomes your operating profit. And then below the line, again, you have your interest expense. Again, if you're paying interest on some debt you currently have, depreciation of your fixed assets, and then other minimal expenses. So again, in this example, you can see the operating profit for the current year is $327,900, and then your net income, subtracting those other expenses, is $296,000. So if I look at the categories, do I see any big changes? So Your labor, is up a little bit from prior year. Your facilities is consistent. Vehicle costs down a little bit. Maybe again, gas is a variable cost based on how often you're driving. So if you're down 22 cases, maybe it's conceivable your gas expense is down a little bit. But it looks like from an advertising and promotion, they reduced it by $10,000. Is that a good thing or a bad thing? It's hard to really know until you dig into what was it they were spending money on. Saving money is great, but again, it's always important to continue to promote your business. So again, that's just a high level example of looking at your current year revenues and expenses and comparing them to what the prior year was. So another important financial statement to look at is the balance sheet. So this gives you a snapshot of what's, from an accounting standpoint, funeral business is pretty simple. You have revenue and expenses, your balance sheet, you have cash, accounts receivable, some fixed assets. It's not a very complicated financial statement process. But again, from a financial position, you have your cash, maybe some investments, your accounts receivable, you have your long-term assets, such as your real estate, any owned vehicles, any owned equipment. On the liability side of the balance sheet, you have your short-term payables, so those are usually your accounts payable to vendors. You have your debt, if you do have some financing in place, and then maybe some other long-term liabilities. And then finally, your equity. So here's an example of a balance sheet where you're comparing current year to prior year. So again, you can see your cash and cash equivalents rose significantly from the prior year. Maybe your collection efforts were good and you were able to collect some of those outstanding accounts receivable. The expenses were down a little bit, so again, maybe you're saving some money. From a trade receivable standpoint, it's down $30,000. Again, that could be impacted by the lower case count. And then your inventories, again, that could be your caskets. I don't know how many people even have full-size showrooms anymore, but maybe you do have a few caskets on hand or in storage, so that's where you would record those. Prepaid and other current assets, again, digging into understanding what that is. Maybe they're prepaid expenses or deposits. This is where if you sell trust for your pre-need, you might find some trust numbers on your balance sheet as well. On the property, plant, and equipment, again, trade names and goodwill, then other. So looking at the total assets, again, 2.3 million compared to 2.1 million in the prior year. So again, having a good consultant working with your local accounting to understand what's going on from year to year is critically important to again understand the health of the business. On the liability side, you have your current liabilities, so accounts payable, accrued payroll, other accrued expenses. And again, this went down year over year, so less liabilities is a good thing. You can see the long-term debt. Again, they must have some financing in place. That's gone down, so again, that shows that they've been making their loan payments back, which is good. And then finally, your shareholders' equity. So from an owner's capital standpoint and retained earnings, the balance sheet has to balance. So you can see here 2.3 million on the total shareholder liabilities and equity. That should equal your total assets. Any questions on the income statement or balance sheet? Yes, sir.
As an addendum, can you include inflation or deflation?
I'm sorry, compared in relation to
price
what?
on your business, and inflation is going to change the total picture.
Yes, yeah. That's something to keep in mind too when you're building your pro forma. So we'll talk about that. So with inflation, we saw gas prices currently rising. That's going to have an impact on your expenses. Your expenses are going to be higher. You definitely want to take that into account when you build your pro forma when you're building what the valuation will be. Does that answer your question? Yes, okay. So again, we talked a little bit about the range of multiples. This is not market specific. This is again is just an example that shows if your revenues, the higher your revenues, the higher the potential multiple of EBITDA. Again, we talked about this, revenue less expenses equals profit. So let's look at the example of an income statement and go through a pro forma exercise. So this is the historical financials of a funeral home, again, at a very high level. They had 285 total cases with revenues of $2 million. Their cost of sales and labor expenses are listed there for total expenses. You get to your total operating profit. You add back your other income and depreciation to get to your EBITDA. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. So depreciation and amortization are really, they're not real cash numbers, right? They're just expense allowances that you can take for tax purposes. So we want to add those back because it's not true cash expense. So we want the true cash flow value of the business. As we build our pro forma, we're going to make some adjustments. So in this example, we're going to add $50,000 of additional revenue. And we're going to do that because looking again at the historical contracts and the historical revenues, we believe we can get maybe some additional revenues through additional merchandising, additional presentation of memorial options. Maybe you plan to renovate one of the rooms to do some more catering or visitation, catering after services. But again, in this example, I feel like they can increase revenues by $50,000. On the expense side, they feel like they can get $30,000 of savings in cost of sales. Again, maybe you have a better casket deal. Maybe you have other relationships that can provide some savings. Maybe you have a different supplier altogether. We're going to adjust labor down by $100,000. And again, this is usually where you see former owner expense come out. As an owner of the business, you get to pay yourself as much as you can afford, I guess, or as much as you want. But under new ownership, with a manager in place, you're going to pay that manager a market rate. So again, in this example, we're going to save $100,000 in labor. From a facilities expense, we're going to decrease by $75,000. Sometimes you see funeral home owners that they own the business in one entity and they own the real estate in another entity. And the funeral home business leases the funeral home from the other entity. And again, that's for tax purposes. Again, maybe the real estate's owned by other family members, but the funeral business is owned by another person. In this case, we're going to reduce the facilities expense because we no longer need to lease the facility. We're going to buy the facility as part of the deal. Again, we experienced some additional savings in vehicles, other expenses. But you can see in marketing, we're actually going to, the negative 5,000 represents, we're going to add 5,000 more in marketing and promotion. And again, that could be to just promote the new ownership, continue to demonstrate to the community that the business is in great shape and that their needs will continue to be taken care of. So again, with those adjustments, it takes your total operating profit from $230,000 up to $285,000. And again, with those adjustments to EBITDA, it creates room for more adjustments. So here you can see the EBITDA. Once we add those additional revenue and cost savings, it takes your EBITDA from $340,000 to $625,000. So again, if buyers are looking at the cash flow valuation and a multiple of EBITDA, you've just increased the value of your business because you've taken a look at your financials, you've pulled out expenses that may not occur under someone else's ownership. Again, we're not from the IRS, so what personal expenses you run through the business, that's your business. And again, the benefits of ownership. But again, to maximize the value, you want to have a true pro forma of what are my revenue and expenses going to be. Any questions on that exercise? This is very high level. Again, when you do it on your own, there's a lot more line items of expenses that you're going to have. So again, as we looked at that table before, looking at the pro forma EBITDA we just did of $625,000, that's going to create 5 to 6.5 times. So again, your business is worth what the highest bidder is willing to pay for it. But again, just as this example, the beginning of the range, that's 625,000 times 5.5 is 3,437,000, up to 6 times 3,750,000. So again, this is just a very high level exercise of how buyers kind of look at the valuation. This is how brokers tend to look at the valuation a lot. But again, there's so many more subjective things that go into the quality of the business, pre-need backlog, all of the above. So I think I'm 5 minutes right on time. So I appreciate your time. What questions can I answer about? Yes?
When you're valuing pre-need backlog, what type of multiple do you give in regards to guaranteed or non-guaranteed, or do you take it at face value?
It's not really at face value. Again, when you look at the pre-need backlog, when you do the historical financial analysis and you're looking at 3 years of historical financials, that should already be telling you what's the maturing pre-need like. Was it guaranteed or not guaranteed? Am I having to take pre-need discounts because of shortfalls or not? So that's going to come out in your historical analysis and the EBITDA of the business. What I would say to that again, if you have a good pre-need backlog, that just gives potential buyers more confidence that you've got a great business, you've got stable revenues for many years to come. But it's not easy to look at that pre-need backlog and predict this much revenue is going to mature every year. I hope that answers your question. What other questions can I answer? Okay, well, I appreciate your time. I have one more shameless plug. As I mentioned in the introduction, I am a trustee for the Funeral Service Foundation. And how many of you are familiar with the foundation? It's the nonprofit arm of NFDA. It was great to be at the banquet last night and see the scholarship recipients. The Funeral Service Foundation raises scholarships for the profession as well. So very honored to be a part of that. Last year we launched our Impact 1000 mid-level giving campaign. So many times we see a lot of the larger corporate companies, vendors in the space, larger consolidators make donations, and many funeral owners or funeral home staff found it hard for finding ways to give. We have through the Impact 1000 giving campaign some exclusive memberships. We ask that individuals can pledge, make a $5,000 pledge, paid in 5-year installments of $1,000. I'm proud to be a founding member. We have a number of folks from Iowa, Mark Parrish, Marty Mitchell, who are Impact 1000 members. So happy to answer any questions about the foundation. And again, I believe 2 years ago, when we experienced a lot of floods here in Iowa, I don't think I mentioned, but I do live here in the Des Moines area. When we had those floods in North Iowa, the crisis fund of the foundation donated $10,000 to help those families. So it goes to more than scholarships. And again, it's a great cause, and we're really privileged and proud to be a part of it. Yes.
FSI has been donating $10,000 a year to foundation also.
Yes. Thank you so much for your contribution. It's very, very much appreciated. Thank you guys for your time.